The solver I'm going to cover first is the second one down here on the list, the change in slope solver here. So let's add it on here so we can see what it's doing. So this one is a little different than the others in that it has quite a few output options here. So it takes it takes one indicator input, and then it has all of these outputs that correlate to how the slope is changing. Here. So let's see. I'll work with the stochastics indicator because the stochastics indicator, it's always reversing to sloping up to sloping down quite a bit. So it I think gives a good example here. And also what I have open and ready to go is the web page, right? So this is the Shark Indicator's web page on the change in slope. Right. So to get to this page, what you can do is just put the mouse on slope. Don't click on it. Just hover over support, and then go down to here to Learn BloodHound, and then click on Learn BloodHound, and that'll bring up a different page than what you see here. But the important thing is it gets you to this right side menu here. So this menu on the right, what you just do is scroll down, and you can see a list of solvers here, and then just click on the indicator change in slope solver, and that'll take you to this documentation page. So the change in slope solver is designed to tell you kind of when the indicator is potentially starting to change directions, and if the indicator is continuing to slope up in a steeper and steeper fashion, or if the indicator is beginning to flatten out. So if we scroll down, scroll way down, you'll note that each of the outputs here, right, are numbered. So you can see the output here, right, we have number 1, number 2, number 3, and the descriptions here also denote number 1, number 2, and number 3, and so forth. And they're numbered. Well, actually I should say the graphics image here is the numbers correlate to the output number as well. So the green number 1 correlates to the long output, right? So the long output is going to be the green output in BloodHound, and the red output correlates to the short side output in BloodHound. So the output here, number 1, strong in direction, right? What that's going to do is, you can see, so this graphic here just kind of has a very generic, curve pattern to it to illustrate, where you are in the slope, as the slope is changing of an indicator. So as the slope is changing of an indicator, to give another example, right? When you look at the stochastic, the slope is, it's always changing. Like right here is a good illustration. You can see the slope, from this point is continuing to steepen and steepen and steepen and steepen, get, and go steeper. Also, moving averages can do that. You can see here, like if we, how about if I get rid of the white one here, and we'll just look at the EMA 20. So we can see the EMA 20, is beginning to curve up, and we can see that the slope, begins to steepen and steepen and steepen. So that's what the increasing section here is denoting. So if your indicator is increasing in its rate of rise, and you have output number 1 set to 1, then let's close that. Then the long side, the long output, you're going to get a long output, right? Because it's set up this way because your indicator is rising. It's rising up, and typically when indicators are rising up, typically that indicates along that price is moving up. So that's indicative of a long kind of situation. Your indicator is telling you that you probably should be in a long position. So when your indicator is rising, you're going to get a long output here. Now, for the short, you can see that the red number 1 here, you'll get a short output when your indicator has rolled over and is starting to fall. And so when its rate of fall is increasing, you're going to get an output on the short side. So that's why the red number 1 is over here. So let's take a look. So I'm going to set these outputs to 0 so we can just isolate it to the output strong in direction. So the output number 1. So let me change my indicator to the stochastics. Alright, so we're just going to use the 7, 14, and 3. That's what's on the chart. And we're looking at D. So the D is what we're seeing, the green line on the chart. Alright, so let me stretch this out here. Yeah, so there we go. Then we're kind of lucked out and found a good illustration spot here. Alright, so we can see our stochastic has rolled over and it's now beginning to slope up, right? And we can see the slope is increasing and increasing and increasing, right? So it's rising faster and faster. And then we can see, sometimes it really helps to stretch your panel out, but we can see here where there's no output that we can kind of begin to see that the rise of the plot is beginning to flatten out and then roll over, right? So it's not rising as fast and it's rolling over. So that's why there's no output. So let's take a look at that graphic again. And here, let me try and make my web browser here a little smaller, like so. There we go. So where my arrow is now, essentially that's in this section of the curve pattern here, right? So the rate of rise is decreasing. So it's still rising, but it's decreasing in its rise, as if it's going to start to roll over. It doesn't mean it's going to roll over, of course, but but we're not continuing to increase. It just so happens to be that with the stochastics, we can see the reason why is because price had a little pullback. Right, had a little pullback, and then as price continued to move up, we can see, looks like that is all the data I have on the chart. But as price began to move up, we can see that the stochastic began to rise again. So it began to curve back up versus rolling over. And if we just kind of reverse, reverse that pattern, we can see for the short side, right, when our stochastic is rolling over, we're getting an output. So what we're looking at is this section right here of the indicator beginning to roll over, but it's also falling at an increasing rate. So the fall is increasing, and that's what is being pointed out here. we can see that we got, one bar here where the stochastic began to flatten out. So basically the stochastic kind of entered into this pattern here where it began to flatten out. It began to flatten out there. And then, right, the stochastic slope began to fall again, steeper and steeper, and then flattened out for a bar, and then it began to fall again in an increasing rate. Right? So we can see here, just within this area here, the stochastic was beginning to fall, then it would flatten out for a bar, and then it would begin to fall again. Right? So since if we go back to the solver here and our output, since only number 1, strong in direction, has a 1 in it, then the short output here, the red number 1, right, it correlates to how the curve of the indicator is going to look. So, if we also wanted, if we wanted to, also see a short output, in these areas here, right, where the stochastic is beginning to flatten out, like right there and right there, right? So that is essentially, that would be output number 2 and output number 3, right? So this is where the change in slope solver gets a little unique. So let's see, let's look at the long side. Let me switch over to the long side here, and let me try and find an area. Let's see, I'll actually find an area, and let me put some values in here. So I'm going to put 0.66, which is what was in there before, and 0.33. Right, so I'm putting 0.66 in 2 and 0.33 in 3. And if you look at the graphics here, right, we talked about number 1. So number 2, so output number 2, which is, right, the green number 2 there, or the red number 2 over here, depending if you're rising or if the slope is falling. Now, number 2 only refers to like the first bar. It only refers to the first bar as the slope begins to decrease, as the slope begins to flatten out. As it begins to flatten out. Number 2 refers to only the first bar of that flattening period. Right? So if we look at the short side, as the plot begins to flatten out here, it only refers to the first bar of that flattening out process. And then any bars after that is going to be, output number 3 relates to any bars after the first bar. Right? So obviously the second, third, fourth, however many bars, that's what number 3 is. That's what number 3 refers to. Any bars afterwards. So, all right, with that, let's take a look at what we have now. Okay. Yeah, let me stretch this way out. All right, so we'll take a look at the long side here as the stochastic is turning up. Right, so as the stochastic is turning up, it's increasing in its rate of rise, and so the output is 1. So that is out here. That's output number 1, and I set the output value to 1. So it tells us that the stochastic is, strongly rising right here, and then we get to this bar here, and let's scroll this over. So if you look at the price flag, it's at 0.66, right? So number 2, I had it set to 0.66, right? And it's at 0.66 because the slope is beginning to flatten out. So right there, we're at the first bar where the stochastic is beginning to flatten out or roll over. And if I step forward on the chart to the next bar, right, so now we had a second bar where the stochastic is beginning to flatten out. And let's see if there we go. That helps illustrate it a little better. So, right, so we had two bars where the stochastic is beginning to flatten out. So on this second bar here, we can see the output, BloodHound's output is 0.33. And that's because we're in section 3 here now. Right, so we're in section 3 where we're in this area where the rate of rise is decreasing or flattening, beginning to flatten out, potentially flatten out. So area 3 is the second bar on, second bar forward, So number 3 doesn't have, any set number of bars. Only number 2 does. So number 2 just refers to the first bar that's flattening out. Number 3 refers to any bars afterwards. And, excuse me. So the output number 3, right, I set that to a third right there. And so that's why BloodHound's output is a third right there. And if we step forward again on the chart, so we had a third bar, that's where the stochastic, we can kind of see that the stochastic is still kind of rolling over, it's flattening out, but this is the third bar in this flattening area. And so that's why we have a 0.33. So, so once again, output number 3 is any bars after the first bar where the slope begins to flatten out. And let's step forward again. Yep, so there's a fourth bar where the stochastic is flattening out. And a fifth bar right there. So we can, if we look at the stochastic's value here, it's 0.688. And if I step forward, it's 0.69. So this just barely has an upslope to it. So therefore it's still in section 3. All right, it's still in section 3 because the stochastic is it's still rising, just barely, but it's still rising, but it's also kind of flattening out. And then finally our stochastic rolls over, and so now we're into this new section of the curve chart here. So now we're in a falling a falling area where the indicator is falling. So we're, so that would be for the short side, that's going to be output number 1. Now for the long side, it's going to be output number 6. So that would be, for the long output, it would be this section right here. But I have this set to 0, so there's not going to be any long output here. So if I set this to 0.5, right, we can see now, if you look at the chart, we can see that long output has a 0.5 because we're in this area, section 6, right? So for the long side, we're in this output number 6 area, but for the short side, we're in output number 1. So you can kind of custom tailor this, to help you out here. I guess one kind of common way to use this is you can custom tailor this to begin to give your BloodHound logic like a little bit of warning. So let's see. Let me focus on the long side again here. So let's take a look at these two bars here, these two bars right here. All right, so we can see that the stochastic is sloping down, so we have a short output and it begins to diminish as the slope begins to flatten out. Now, what we can also do is if we look at this, that's actually, I'm sorry, we're in this section of the curve chart here, right? So it's red number 2 and red number 3. Now, red number 3 correlates, so the long side would be number 4. So as their stochastic is beginning to flatten out, if we wanted to get kind of a warning for the long side that this is flattening out and that we might get a reversal up, for the long side, we could use output number 4 here, right? So the green number 4, we could use that right here. So let me put, I'll put 0.5 in there just to illustrate. And so look here. So now on the long side, we have a 50% output on the long side, or 0.5, right? 0.5. And so that kind of gives us a little warning here, or an indication to the long side that the stochastic is starting to, roll up. So, kind of the use of this, I'd say, is definitely a little more of an advanced feature, that you can use in your logic. So this really kind of gets into the advanced capabilities of BloodHound's fuzzy logic, that you can use. And so as we look at these two bars, right, as the stochastic begins to flatten out, we get a 0.5 on the output, and then eventually the stochastic does roll up, and we get a 1 on the output here. So, essentially that's really what the core of the solver does, is it allows you to get an indication of where your indicator is in this curve chart here, right, in this or cycle chart. And of course, you just set the outputs for whatever part of this cycle of the indicator that you want that applies to your system. So some of you may have kind of trade rules where you are looking at something at the stochastics, or something like the stochastics. Maybe you're looking at the momentum indicator, or maybe you're even looking at moving averages, and you're interested when your indicator is potentially starting to roll over, and that's where the change in slope solver would be helpful to you, is knowing when or getting some kind of a heads up, an indication of when your indicator is beginning to roll over to the opposite direction. So if I just wanted if I wanted to use this change in slope solver just to warn me when the stochastic is beginning to roll over, right, I could just use the number 4 here. So let's see here. Okay, yeah, so on the long side, number 4 is in the decreasing but flattening out. And for a short output, it's when our indicator is rising but beginning to flatten out just before it rolls over and turns down. So as we look at the chart here, right, so the way I have this set up now, our stochastic is still pointing up, but it's right at that point, where it could roll over any moment. And you can see I'm getting a short output here, giving me a kind of an indication, or a warning, or a pre-setup or something like that prior to the stochastic actually rolling over. So, and of course, the same for the long side here, as our stochastic begins to flatten out, and just before it rolls up, it reverses direction and rolls up. We're getting a long output here. So if I put a 1 back in here in section number 1, then if we look at the output here, so remember number 4 I set to 0.8, and number 1 I set to 1 of an output. And if you look at the, let's stretch this up here a little bit. So if you look at the outputs on the long side here, you can see that the first 2 only correlate to 0.8, right? So that's just kind of giving me a little warning. And then as the stochastic actually is sloping up, then I get a full value of 1, or 100%. So, and of course, same for the short side. So, to reverse that, there we go. So on the short side here, right, so our stochastic is sloping up, but it's starting to flatten out. And on the short side, we have a 0.8 on the short side output. Step forward, same thing. Stochastic is sloping up, but it's really beginning to flatten out. Same thing, a 0.8 on the output for the short side. And then eventually the stochastic rolls over. And now the short side output is a value of 1. So that's kind of, that's another example of the fuzzy logic use for this. All right, and so let's see, Ro would like to see this demonstrated on the MACD. Okay, yeah, you bet. Let's let me put my MACD back on here. All right, and you'll notice here I have this little save template window popped up as soon as I clicked OK to add the MACD. Right, so this little save template is BloodHound. It's giving me a little warning here because look, I didn't give this system a name yet. Right, I haven't named my BloodHound template yet. So this is giving me a little warning, asking me, do I want to put a name in here? Do I want to save this? So let me click yes, and let's put today's data in here. Alright, there we go. There's today's date. Okay, so now the chart will update here. Okay. Let's move we'll move the MACD up to the top here. Okay, so the blue line is just the MACD, right? I have the histogram turned off and everything right now. And I'm going to switch over to the logic tab and start working in the logic templates here. So let me name this. Alright, so I'm going to add my existing node that I already made here, this change in slope. Drop it on here, and I'm going to rename this here. Alright, so there's our stochastic change in slope. Let me add a new change in slope indicator. And on this one, we'll look at the MACD. Alright, so change my indicator over to the MACD. There we go. Alright, my MACD plot is selected. The parameters, yeah, 12, 26, and 9. That's what's on my chart. So that's good. Let's connect that up so we can take a look at this. And all right, so this has the default settings in it, right? So number 1, so the strong in direction, right? Output number 1 is basically when the the indicator is basically the first bar that it rolls over. So we can see the stochastic had rolled over here, and our output, full output, and the MACD is still beginning to fall stronger and stronger, right? And we're getting this a 1 for the output. We're getting a full short output here. Let's move forward. Okay, now we can see the MACD began to flatten out there, and so our output decreased a little bit, and then it reversed back up and gave us a long output for the upside as the MACD began to roll over, and it rolled back over again to the downside, and it's still sloping down, but it's beginning to flatten out. I can tell here by the output, right? So the output is at 0.6. Right, so that's going to refer to number 2. Number 2 there is set to 0.6. Let's take another look. Again, the MACD rolls back up again. So we have a 1 on the long side here, right on the long output. We have a full value of 1. And that correlates to output number 1, strong in direction. And the MACD continues to roll up and continues to slope up, and then the MACD begins to flatten out just a tad bit, and we can see the long side, the long output fell a little bit to 0.6. So on the long output we're in area number 2, and let's see. Let's take a look at the short output here. So we can see the short output is at 0.33. So that's going to correlate with number 5, right? Output number 5. So let's take a look at this. So here we go. So red, number 5, right? So the MACD is sloping up, but this is the first bar where it began to flatten out, right? First bar where it began to flatten out. So for the short side, that's number 5. It's number 5 for the short side right here. Number 5 is set to 0.33. So that's why our short output is 0.33. Now, let's see if we get one more bar. Oh, no. The MACD just basically just rolled over to the downside. Let's see. Let me try and find another good area here. Yeah, this MACD is changing directions pretty quickly with its default settings. All right, here's a nice smooth transition. Yeah. We'll take a look at this. All right, so we have this, 4 bars here where the MACD is really just taking a dive with price. Price is taking a dive. The MACD is taking a dive. So it's sloping down, in an increasing rate. And then the MACD begins to flatten out for 1 bar. So the first bar of this flattening, our output is 0.66. If we take a look at our solver here, right, so that's going to be number 2. Number 2 for the short side, right? So number 2 for the short side. Take a look at our graphic. right? So here's the red number 2, right? So, right, the plot is falling. Our plot is sloping down. It's falling, and it's the first bar where it begins to flatten out. So that's number 2. It's number 5 on the long side, right? Number 5 on the long side. So if we take a look at number 5 here, that value is set to 0.33. So if we take a look at the long output, it's 0.33. So we do have a little bit of a long output here. Now, let's go forward one more bar. All right, so the MACD is still falling, but it's flattening out. It's flattening out. So now we're on the second bar where the MACD is flattening out. So now our short output, right, is 0.33. So if we look at the chart, we're in this area now here. We're in this area of the curve where it's falling, but it's beginning to flatten out here. So we're at number 3 for the short side, number 4 for the long side. So if we look at number 3, remember number 3 is the short side. It's at 0.33. And here we go. Our short output is at 0.33. And we're at number 4 for the long side, 0.66. And we can see the long side has increased up to 0.66. Right, all correlating with this curve map here. And then finally the MACD curves up. So now we're in number 1 for the long side, the green number 1 for the long side. We're in this part where the plot is beginning to curve up. So, all right, let's see. I hope that gave a good second explanation there for you guys. All right, so let me see what else we got here. All right, so Andrew had a question here. While using the change in slope solver, can you adjust the flat zone area? Well, I guess that question seems to be a little open to interpretation, but unfortunately it looks like Andrew had to leave early. And well, what you can't adjust the area of the flattening zone. Right. Essentially, the only real adjustments you can make with the change in slope solver is obviously selecting which indicator you want to look, and the outputs are not changeable other than what the value of the output is. So you can't actually, I guess, unlike the slope solver here, let me grab a slope solver. So the slope solver, you can actually kind of determine what type of slope you're looking for. Whether you're looking, for the indicator plot, to be a certain slope or more, right? Or a flat slope to kind of I guess the minimum slope would be a certain slope or less, right? A certain slope or less. So the maximum slope would be used to find, bigger slopes, high sloping areas, and the minimum slope is to kind of look for when the indicator's flat, up to a certain amount of slope. And then if the slope gets too great, then you begin to enter into the maximum slope area. So yeah, the change in slope solver doesn't have that capability, because it's not designed to actually look at, to determine, it's not designed to determine what the slope is. It's just telling you where you are on this curve chart, right? It's designed to tell you where you are on this curve chart. So All right, let's see. So that was Andrew's question. And all right, I have a couple other questions that I think are on another topic here. So if there's no other questions on this, I'll just start working on your guys' questions that are coming in here. All right, so James would like to create a no trade zone of 10 ticks on each side of a bunch of different prices that he has for oil. So let's see. So it looks like James wants to create some kind of trade filters, or to be more direct, I guess he wants to prevent any kind of trade signals when the price of oil is 10 ticks within the $48 price, the $49 price, the $50, and the $51 price. Okay, yeah. So James was trying to use the support resistance solver for that, and you know, I'd say, James, that's a really good assumption there, but I think, but what will work better, since you're trying to define a zone of 10 ticks below or 10 ticks above, you know, the 48, the 49, the 50, and 51, the comparison solver is going to work better for that. So let's see here. All right, yeah. So let me put together a couple of comparison solvers to show you how to do that there, James. All right, so let me get a few things out of the way. All right, so let me kind of prep my chart here, and I'll put up a few horizontal lines here marking the price zones. Let's see if, all right, looks like, yeah, price might come down to the 48 zone here. Yeah, all right, so I'll build 3 comparison solvers using the 48, the 49, and the 50 price levels here. And let's stretch that chart back up. Okay. Let me delete that solver that we're not using. I'll delete it off of here. All right, so back on the logic tab, I'm going to start a new logic template. So, all right, so let's see. I'll call this no trade zones. All right, so we're going to use the comparison solver here. So what we're building is we're building a set of rules or conditions that will exclude trading from happening when we are within a certain distance of, you know, of these price levels here, right? The white horizontal lines, so really what we're building is we're building a trade permissive when it's outside of those zones. All right, so we want our solvers to give us an output when we're outside of that 10 tick zone, right? So actually, let's see. So I'm going to define a little 10 tick zone on just one of these on the 49 price here. Okay, so there we go. So there's our little 10 tick zone here for the 49. So whenever price is, above that zone or below that zone, we want an output from our solvers here. So let's work on the 49 price zone first. All right, so we're comparing price to this zone. So let's set indicator A to our price, and it defaults to the closing price. So we'll use the closing price for this example. And we're interested in a 10 tick zone. So I'm going to set the small amount to 10 ticks and set the large amount to 10 ticks. Okay. Now let me clear out all the outputs here. I'm going to clear out all the outputs here. So I'm going to explain this kind of the opposite the way that James wants it, and then work my way to the way James wants it here. So if I set, see where we have this long output where A equals B within, that says 0 ticks. Let me click off the solver. There we go. Now it updated. So we have A equals B within 10 ticks. So if I set that to 1, and if I set the short output where A equals B within 10 ticks, now you'll notice, let's see, yeah, that kind of, red and green make brown, and it's a little hard to see on a black chart. I'm going to change the colors for BloodHound so we can see this a little easier. So let's set that to lime. That's nice and bright. And let's see if I can find a brighter red here. All right, how about orange red? So I'm going to try and make that brown racing stripe, well, okay, kind of a dirty green. All right, but you guys can see the racing stripes a little better now, I hope. And all right, I haven't finished setting up the solver yet. All right, so I set the closing price up, but what we're doing is we're finding when the closing price is close to within 10 ticks of the estimate 14, but we want to know when it's within range of a price value here. So we're going to use a fixed value because we're interested in 49. So let's set this to 49 bucks, 49 for the instrument price. And there we go. So there's the output that I'm trying to illustrate to you here. So you can see whenever the closing price, right, gets within our 10 tick range, we have an output. Now this is set up the opposite of what James actually wants. James wants to prevent trades when price gets within this range. So we actually want to invert this output. We actually want to invert this output. So if I take the invert, set that to true, there we go. So now, since I have a long and a short output, when price is outside this range, that would allow a trade to go through, right? So what I would do is this now becomes a permissive. So I would use an AND node here, and I would, just connect that into your AND node. So so as you're building a trade system, you probably have an AND node here, probably just prior to the result node. So you take this, connect it into your AND node that's just prior to your result node, and then the rest of your trading logic, your trade triggers would connect into this AND node here. But you probably already have this AND node with the rest of your system. So now you just need to add this into one of your AND nodes. And so what we're doing is we're comparing the close to the 49, I'll put a little dollar there, the $49 area. And I could put even, let's say I could say 10 10 ticks. So within 10 ticks, or outside of 10 ticks actually. All right, so there's that. So now what I can do is there's that same solver there, right? You can see the name. So I can copy this. I'll copy this a couple more times here, and let's make this our $48 and change our fixed value to 48 for $48. And I'll take this third solver here, and we'll make this one our $50 area. So now I need to change the fixed value to 50 for that. And go back to the logic tab, and let me add these other solvers on here, like so. All right, let's shrink the chart up here. So now what we'll do is we'll take all of these comparison solvers, plug them into an AND node, and now let's kind of scan through the chart. So let's go back. I'll go to the beginning of the chart here. All right, there we go. Price dips inside that $49 10 tick area, and where there's no output here, that would prevent a trade from going through, right? Because we're using an AND node, so that would actually prevent. So if we had our trade, the rest of our trading system connected into this AND node, the trade signals would not be able to get through where there's no output. So let's continue to go through here. Yeah, more. Let me find an area where price goes down to 48 or up to 50. Let me tell you, with the price of oil down so low, I hope the price of gas goes back down a little bit. I think it's, historically, I think gas is a little pricey for where oil is, but yeah. All right, so here we go. Price goes up into the $50 area, and once it gets within that 10 tick range, we can see there's no output, so no trades could take place within that area there. And let me, more areas on the 50, and let me keep scrolling until we get down to the 49 area. There we go. I'm sorry, 48 area. So now we're in the 48 area, and we can see no signals would take place here. All right, so yeah, all right, so that's it. Let me kind of show you, there's another way we could do this as well. Let's just take a look at the 49. Just take a look at the 49 zone here. Right, so I inverted this. There's even another way I could do this. So if I turn the invert off, set it back to normal, right, we have these outputs here where A is greater than B. So what I could do, let me set this back to 0. All right, so there's no output now, no output from the solver, everything's set to 0. But if I set my A, let's see here we go, A greater than B by 10 ticks, if I set that upper one, and right, so we can see when price is greater than 49, I get a long output. Whenever price goes below 49, I don't get anything. So if I set this lower one where A, remember A is the closing price, if it's less than B, and B is our $49 area by 10 ticks, if I set that to 1, right? So now we're getting a short output when price is below $49 by 1 tick or more. And then if I do the same for the short output, then essentially you can see now I have the same result as I did before, you know, when I was using the invert. So there's two ways of doing the same thing there. Right. So yeah, I'll just let me set this back to the way it was. Okay. All right, there you go, James. Okay, good. Looks like I took care of James's question. Great. All right, yeah, I think Steve has a comment. So Steve is just saying, or opt to 21 SMA to avoid chop. Yeah, so I think Steve is commenting on what I'm doing here. So yeah, so Steve, if you wanted to use a moving average to make sure you don't take any trades when price is chopping around the 21 SMA, then you could do the same thing as what we did here and change your indicator B, just change it right to an SMA 21, and you would get the same results there. Yeah. And so yes, yeah, right. So the way this is set up is, you know, if I let's see. Well, let me go ahead and do this. So let's change this. This is an EMA 20. So I'll just use an EMA 20 to illustrate. All right, so we'll set this back to indicator value, change this to an EMA 20. All right, and there we go. So whenever price, you know, gets out of this 10 tick range of the EMA 20, we can see that we're getting an output here. So, yeah, here's another area. So price is outside that 10 tick range of the EMA 20, and this would allow a trade to take place when price is outside of the EMA 20 10 tick range, above or below, 10 ticks above or below. All right, so yeah, Steve, that's how you do that. So let me put this back to a fixed value there. There you go. All right, actually, looks like Ray's giving me another explanation of his question. So let me take a look at this. Okay, so Ray, what I need to know is, how are you using the MACD? How do you want to use the MACD with the Bollinger breakout, right? So, you know, everything comes down to the details of how you want to use an indicator, right? And I guess when you've had a lot of exposure to people, you'll understand that everybody uses indicators in different ways. So don't think that, you know, that I'm going to understand how you're using an indicator, because you could use it. I've seen some really far out ways that people use indicators. So I need to, so when you ask a question, you really have to explain to me how exactly you're using an indicator. You know, if you just say, hey, I want to use a MACD, that really is meaningless to me, because I need to know exactly how you're using it to know exactly what solver to use, you know, for that use of the indicator. So, you know, knowing the details determines which indicator you're going to use and how you're, knowing the details of how you use an an indicator determines which solver you use, and more importantly, how the solver gets set up. So, Ray, that's why I'm asking. I need to know exactly how do you want to use the MACD within the system, because there's lots of ways to look at the MACD. You know, are you just looking at the slope of the MACD? Do you want the MACD to be above 1 or below -1? I mean, there's 1,000 ways that you could use the MACD or the histogram, and how you're using it determines what solver you're going to use, right? So just to give a quick explanation, if you're looking at the histogram of the MACD and you want to know when the histogram is above 0.5 or below -0.5, you would use the threshold solver. If you just want to know if the histogram is above 0 or below 0, once again, you would use the threshold solver. If you just want to know that the histogram is sloping up, then you would use the slope solver, right? A totally different solver. So, yeah. So Ray, if you can give me a little, an explanation of how you want to use the MACD, then I can show you how to put that. Now I can show you which solver to use and how to set that solver up. So I just need a little more information from you there, and we can get this done. Okay. Yeah. So yeah, let's see. So Ray, if you don't know how you want to use the MACD, that's something I'm not going to suggest, because like I said, we don't provide trading advice. So I'm here to help you figure out which solver you want to use, depending on how you're using an indicator. So you need to know how you want to use the indicator first, and then I can show you which solver to use for that. So Ray, I imagine you probably have some kind of idea of how you want to use the MACD, within the bowling or breakout system. So if you can, take the time and explain that to me, that'll help me out, and we can get this done. All right. Okay, so let's see. Raul is asking, after a long entry signal, I would like to enter when the price exceeds, let's see, the previous bar. All right, so after an entry signal, price exceeds. Okay, so let's see. All right, so let me just create a very simple entry system here. All right, so I'm going to start with a new logic template, and I'm just going to create something real simple. Yeah, so I'm going to use a crossover solver, and whenever the MACD crosses the 0 line, that's going to be my entry signal, right? Just something real simple. So let me change my indicator A to the MACD. All right, my plot is set to the MACD. And I'm looking for the MACD to cross the 0 line, so I'm going to use a fixed value of 0. All right, there we go. Let's take a look at these. All right, so there's a couple of signals there as the MACD crosses that 0 line. All right, let's name this. So the MACD crosses the 0. All right, so we want to know when price exceeds the previous bar afterwards. All right, so that's just going to be a simple comparison here. All right. Okay, so here's our long signal here, and we want to wait until price exceeds the previous bar. Okay, so we can see. Oops, let me grab that arrow there. So price up here exceeded the previous bar. Right, the closing price exceeded the previous bar's closing price, something like that. Okay, so we're going to do a comparison. We're going to compare the current bar's closing price to the previous bar's closing price. So, all right, I've grabbed a comparison solver here. All right, so we're comparing closing prices. Let's see. So I'll use close 0 to indicate, the current bar, and we'll compare that to the close of 1 for 1 bar back. All right, so I'm going to set indicator A to the closing price, and so this is going to be the closing price of the current bar. So look back period of 1 is going to be the current bar, and down here we'll use price again, the closing price, but this time we're going to set this to 2. So 2 being 1 bar back, and we're going to just look at the single value of, we're just going to look at just the closing price of the second bar back there. And let's see here. All right, so okay, so there we go. So there is a long output from this. So the next step we have to do is, right here is our initial long signal here. So there's our first long signal, and then here is where our trade trigger is going to take place. After our first long signal, there's going to be our second long signal after that. So what we need to do is we need to take this long signal, right, from our MACD crossing over the 0 line, and we need to extend it forward onto the bar where the closing price exceeds the previous bar's closing price. So that's the trick, is get this signal and extend it forward here. Now, since I'm using the crossover solver, I could just use a look back period and essentially just extend it forward 3 bars. Right, so now this crossover is extended there, like so, like that. That's kind of a simplistic way of looking at this. So once again, it kind of comes down to the details of how you would accomplish this. Yeah. So there's our first trade signal, and then there's a second one afterwards. So let's take a look at the chart. And yeah, so basically price was kind of chopping around here, so there was no secondary signal afterwards. Same there. So maybe the MACD may not be a great trade signal setup, but I guess the concept is there. So okay, so now let me get into let's kind of show another way of doing this, because right, I was using the crossover solver, and not every solver has this look back period. So you know, so let's see, yeah, so what, just to kind of expand upon this, so, you know, let's say you have a bunch of logic here that's defining, you know, what the long entry is, right? And so then your long entry is basically typically going to be, you know, so you have a bunch of logic that typically you'll have fed into an AND node, and so your long entry signal is probably going to be coming out of an AND node. So right, so this will just represent our entry signal. Now, so what I need to do is I need to get this long entry signal and extend it forward enough bars, you know, to allow price to, you know, to close above the previous bar. So another way I can do that, right? An AND node doesn't have a look back period. Right? It doesn't have a look back period like the crossover does. So if you have an AND node or some other solver, what you can use is this look back. Or you could use the signal extender as well. But for this, it's probably just going to be easier just to use the look back period. And let's see. So here's another thing. So the look back advantage of the look back period is it has this displacement feature. And let me just give an example here of, let's see, let me just set this up to give an example. All right, so if we look at the output now, you can see that our original long signal actually now disappeared. It's now disappeared right where our crossover took place, and that's because I used the look back node, and I used this displacement of 1. Right, I used a displacement here of 1. So that actually prevented our long entry signal here. That actually prevented it by using this displacement of 1. And then I extended it 2 more bars. So if we take a look, right, so here's the original trade signal where the MACD crossed over the 0. So we can see there's no output here on this actual bar. It was shifted forward 1, or it was displaced forward 1. Right, so this displacement does the same thing as the NinjaTrader displacement. So if we take a look at an indicator here, so this is our EMA that we're looking at, you can see all indicators have this displacement parameter from NinjaTrader. Right, so it just shifts the indicator value forward 1, or it shifts the indicator plot forward however many bars you want it to. That's what the displacement does in NinjaTrader. And so in BloodHound, we have that same displacement feature here, and so it shifted the output forward 1. And then I was only needed, then I just only extended it. I set the look back period to 2 to just extend it forward by 2. And since I'm extending, essentially I'm extending any kind of signal that we get forward by 2 bars, I need to set my look back to max. And so now, when we combine that into the AND node with our solver that's looking for the closing price to exceed the previous bar, then we get our signal there. And let's take a look here. And all right, so let's take a look at this. We might have to refine this a little bit more. Yeah, so I'm looking at the crossover solver. So this is actually the original log signal here at the crossover. So if we want to actually eliminate the original long trade signal, then let's see, let me and oh, okay, actually it was correct. Sorry, yeah, it was correct. Actually, our crossover was right here. It looked like the crossover actually took place on this bar, but actually the crossover took place on this bar. It's hard to see. It's really small numbers there. Okay, so actually this is working as expected. So using a look back with a displacement of 1 will actually eliminate the original long signal, and only a long signal will show up afterwards. Once price exceeds the previous bar. So if I wanted to include the original trade signal, I could set my displacement to 0, and then of course I need to increase my look back to 3, like so. And let's take a look. And all right, so since I'm using an AND node, I'm not actually getting the original signal anymore because price did not exceed the previous bar here. So on the bar, let me slide this over here. Yeah, so we can see price actually moved down, so it didn't exceed the previous bar. So that's why the original trade signal got eliminated, was because I'm using an AND node there. So if I wanted to see both signals here, what I would have to do is use an OR node. So I could take the original, our original trade signal, feed it into an OR node, and oh no, sorry. Let me grab the right solver here. Okay, so our crossover is our original trade signal. There we go. There's our crossover. Feed that into OR node, and then I can take this other logic here, and let's see. Let me put the look back to the way it was. Now I can connect that into this AND node into the OR node. So now I would get the original crossover signal, and if price exceeds the previous bar's closing price, I'll get that trade signal afterwards as well. Right, so there's kind of a combination of ways of doing this there. All right, so Raul, I hope that helps. Okay, great, thank you, Max. Okay, so Max is saying, so we'll enter long when we cross above 30, and then we'll exit when the RSI gets above 70. And then for a short trade, we'll go short when the RSI crosses below 70, and then we'll exit that short position when the RSI gets to 30 or less, goes below 30. All right. Okay, good example. Thanks, Max. All right, let me get an RSI indicator on here. All right, I'm just going to use the default settings here, 14 to 3. And good, our lines are set to 30 and 70. That makes it nice and convenient. I'll lighten up these colors here so you can see them better on the chart. Okay, there we go. So, yeah, so let me build I'll build an entry system. Right, just simple entry logic. When our RSI, crosses above our 30, and let's see, do we have? Come on. RSI doesn't get up to 70 very often. Let's take a minute and let's take a look at some minute charts here. See if that'll help. Yeah, well, it's probably a bad instrument to try and generate some to get that RSI up to the 70. Okay, there we go. So, all right, good. So we'll get an exit signal there. There we go. And let's look back here, and hopefully I can get an entry signal. Here we go. Good, there we go. Alright, let me get BloodHound opened back up. And let's see, I need to think of a name for this. Okay, there's a name. Hopefully that name works. All right, let's create a new logic here. All right, so this is going to be an RSI entry, and I'm going to use a crossover solver, and need to set my indicator A to the RSI. And I'm just going to use the RSI number, not the average. Yep, 14 and 3. So just use the defaults. All right, and so I want a long signal when we cross above 30. So I'll set this to fixed value and 30. All right, so there's our long signal here. And so we're not interested when the RSI crosses down through the 30 for a short signal. So I'm going to turn the short side off. So I just want the long side only. Right, so there's our cross aboves, just right. So this is just a very simple entry system, just for illustration here. Okay, so there's that guy. Now I'm going to take a little shortcut, go to the solver tab. Here's that same solver. I'm just going to make a copy of it, and we'll set this one up for the 70, right, for a short signal when we cross below 70. So I need to set my fixed value to 70, and now since we're crossing the 70, we're only interested in the short signals here. So there we go. So I set up two crossover solvers to cross two different values here, right, the 30 and the 70. So I'm going to switch back to my logic template, go to the solvers node, and under existing nodes, there's my RSI 70 short crossover. Put that on there. And let's just take a look at it first. Make sure it's working correctly. There we go. So there's a couple of RSIs crossing below 70. So essentially both of these create the entry logic. And in this case, we're going to use an OR node. All right, so that the OR node joins these two solvers together, and it allows both of their outputs to just pass through the OR node into one output. So the OR node, think of the OR node as basically combining a bunch of solvers together and converting all those outputs into one single output. So it just allows everything, the OR node allows everything to just pass right through it and gives you just one single output. Okay, so there's our short signals. There's our long signals there. So, all right. So now the exit logic is going to be very similar. Very similar. So let's see. Let me create a new logic template. So when you're creating an exit, you have to create a new logic template. So you put your exit in a separate logic template. All right, I'll just rename it as my exit. And so now I need to create a new set of crossovers. Okay, so here, remember, here's our long signal was right here. And now we're looking to get a short output that's going to exit that long trade. All right, so we have a long entry back here, and we want a short output to exit that long trade. Okay, so I'm going to change indicator A to my RSI again. All right, like so. All right, the period is all good. The RSI is selected, nothing else to do. So now let's set our type to the fixed value, and let's see, so 70, we're going to set that to 70. Now notice, right, we actually got a long signal here. So notice we actually got a long signal, but we want a short signal. Remember, so a short is going to exit a long position. So it's not going to reverse this, it's going to exit it. So we need to change our output settings here. So we don't actually want the cross in direction. So let's set that to 0. We want cross against direction there. So there we go. So now you can see this has changed to a short output there. So this short signal will actually exit that long position, the long trade position. And I want to take my evaluate and set it to short only. There we go. So there's our short only. And so let's see, let's give this a name here. All right, so this crossover is going to be used for our exit, like so. And I could go to the solver tab and copy it again, but I'll just build another one here real quick. So I'll set my name. All right, so this is going to be the RSI crossing the 30 exit. And there we go. Okay, let me change the spot on my chart. Yeah, there we go. I'll leave that green because so when the RSI crosses below 30, that's going to exit a short trade. So we're actually going to want a long output there. Okay, so let's finish setting up the solver. Put the RSI in. And we'll set indicator B section to our 30 level. And once again, right, so remember, we're using, when the RSI crosses below 30, that's going to be used to exit a long trade. I'm sorry, exit a short trade. So if we're in a short position, if we're in a short trade, we want a long output here to exit that short. So once again, we will need to reverse our output here. So we're going to use crosses against direction. Okay, and there is our short output to exit, I'm sorry, there's our long output to exit a short trade. And let's set our evaluate on this to long only. Okay, so there's our, this is our short exits. Right, short exits there. Now we're going to do the same thing here as we did with the entries. We're going to use an OR node to join these two guys together. Okay, so there are our exit signals, like so. Let's take a look over here. There we go. So whenever the RSI crosses above 70, we get a short to exit a long position there. And let's see. All right, Max. So that's it. Simply put. Right. So you're going to have, one logic template that defines your entries, and another logic template that's going to define your exits, right? And just to give a quick explanation here, if we go into our strategies, right, to use Raven, if I scroll up, we can see we have an entry logic and an exit logic. So we would set our entry logic to the RSI entry logic template, and our exit here would be set to our RSI exit, right? So, okay, good deal. Looks like that took care of Max's question. Yeah, so I got a comment from Andre on limiting trades per certain times and days and days of the week. So yeah, so Andre, yeah, it really, something that sophisticated needs to be done by an indicator. So yeah, that would be the best path, is if you can. Sounds like Andre can write his own indicators, so that's a nice advantage to have. And so yeah, that would be the way to go, is to write your own custom indicator. And so your indicator, so for the rest of you guys in the room, I'm going to speak a little coding language here to Andre. So Andre, your indicator, you could use either a bool series to tell BloodHound when you want to allow trades, or you could use the bool series to tell BloodHound when not to trade, and then you would just reverse that in BloodHound. Or of course you could use a data series, whatever you prefer. Set your data series from 0 to 1, and I guess 1 would tell BloodHound that it's okay to trade during that time of day, and a 0 would tell BloodHound that it's not okay to take a trade during that day. So just Kind of comes down to personal preference. I don't think there's any best way to do that. All right, so Andre, I got some questions here. Okay, so your first question, can you fix the high-low, no trading zones automatically based on the high and low of, let's see, the last 24 data points? Yeah, actually I think we can. I think Chameleon has the functionality built into it for what you want. Yeah, I was going to start to say no, that you'd need a custom indicator to track the last 24 bars, but I think Chameleon has the functionality that will work for you. All right, so let me shrink that down, and let's add Chameleon on here. All right, so there's Chameleon. All right, so Chameleon has this look back period, and the look back period does different things. So let me set this to 24. Now, so the way this look back period operates, it tells you how what this look back period does by the plot name. All right, so the close says SMA, close SMA. So this look back period, or this look back, it's actually, it becomes an SMA period for the closing price. So if I set this to 24, what that does is Chameleon will plot a 24 period SMA for the closing price, right? And you can see the rest of these other prices also have SMA in the name. So all of these other prices, the median, the mid, open, typical, weighted. So, but changing the look back period to 24 is going to create a 24 period SMA for these prices. Now, you'll note that the high and the low actually says bounds. So it's not going to define an SMA for the high and the low. What it's going to do is the highest high for the last 24, look back period, the highest high is going to be tracked, and the lowest low of the last 24 bars is going to be tracked. So let's put that on the chart, and Sorrel, you let me know if this is kind of what you're looking at here. All right, so let me shrink the chart up a little bit. Yeah, there we go. Yeah, good. So we can see, price shot up, made this high, and we can look that this high is tracked forward for the last 24 bars. And same with the low. Price came down, made a low, and the low is tracked for the last 24 bars. And yeah, interesting. We had two bars a little bit lower, and that goes way back here to this bar back here. So, and then it stepped up. So anyway, so Chameleon is tracking, can track the highs and the low, highest highs and the lowest low, those high bounds and those low bound areas. So, all right, it looks like this is what Raul's looking for. All right, so. All right, so it sounds like Raul wants to define a no trading zone, within, we'll just say within 10 ticks of the highs or the lows area here. So let's go build that logic. All right, go to logic board. And let's see, I'm going to take my no trade zone logic template, and I'm going to make a copy of it. All right. So we can see I have the original up here, and I have the copy down here. All right, right, so no trade zones, 10 ticks of high or low, I guess I'll just call it bounds. Yeah, that's not a very commonly used word for this term. Let's see. Zones, I guess. All right. And yeah, I don't want to change these three solvers that I already have set up. You know, if I change the solver in here, it also would change the solver in our other logic template, right? So it would actually change this solver as well. And so I don't want to change the solvers in this logic template. So actually I will just need to delete those, and I'll just delete everything. All right, so and I'll just start from scratch again. You know, let me just take a new solver and I'll just start from scratch. All right, we'll click, connect that in, and so we'll compare the close to, let's see, we'll do the high zone first. All right, we'll set indicator A to price, and let's define kind of this 10 tick no trade zone. And so now indicator B is going to be our high zone as defined by chameleon. So let's go set chameleon in here. There's chameleon. All right, change our look back to 24. And all right, so the high bounds is already selected, so we're good there. And so next I need to clear my outputs, set them all to 0, like so. And I'll set this, once again, I'll set this A equals B area here to 1. Set that to 1. All right, so we can see whenever the closing price is within 10 ticks of the green plot line here, right, it's identifying. So right now we're identifying when price is within 10 ticks of the green, you know, high zone, but we want to prevent trading, so we're going to, so let me back up here. So where BloodHound has an output, and all right, so where BloodHound has an output, right, this effectively would allow trading. This would allow trading here. So this is actually, but this is actually where we don't want to allow trading. So I'm going to, in this case, I can actually invert it like so. So now the output, right, the long and the short output here, that is the area where trading would be allowed to take place. And of course, just as we did in the other logic template, we would use an AND node, connecting into an AND node like so. And then you take the rest of your trading system and connect it into this AND node here. Okay, now we also need to make another solver that looks at the low bounds here, the low zone. All right, so let's see, this time I will take the solver I just made, I'll make a copy of it, and let's change the name here. So we're going to use the low zone. Go into chameleon, and I just need to use the low bounds for Chameleon here. Alright, so that one's set up. Let's go add that to the logic board here. Go to existing nodes. Go to the solver, right, the close, looking at the low zone. Connect that in there. And there we go. Yeah, so effectively what this ended up doing is, right, whenever price is making new lows, it's not going to allow trading here, because we can see that price is, you know, really close to the, you know, most recent lowest low, you know, within that 24-bar look back period. So it basically allows trading when price is, you know, in between the low and in between the high. That's when it's going to allow trading. So, right. So if you wanted the opposite effect of this, all you would have to do is turn your invert off. You can take the invert, let's turn it off for both of these guys. And let's see, not only that, but we also need to change this to an OR node as well. Yeah. This has to be an OR node because neither of these solvers are going to be in agreement. Right? So let me illustrate. So if we take a look at the high zone area, right, we can see we get an output when price is within 10 ticks of the high zone. And for the low zone, look at this, we get an output whenever price is close to the low zone. And neither one of these is going to be true at the same time. Price is either going to be near the low or it's going to be near the high, but not both at the same time. So that's why we have to use an OR node here, if that's what we want. However, when price is in between the two zones, it would be above the low zone and it would be below the high zone. So that's why we would use an AND node. So let me just kind of set this back. Okay, there we go. All right, so there we go. There's question 1 for Raul. And let's see, another question from Raul. Can the time session for entry be different than exit? For example, so Raul would like to have his entries be between like 9:30 and 10:15, and he'd like to set up some exits from 9:30 to 11:15. So he wants to give the exits an extra hour. So yeah, absolutely, Raul. You know, so you know, let me use the RSI just as an example here. So we have the RSI entry, right? So I could take time session solver, drop it in here, and I'll need to use an AND node. So here's our, you know, our crossover signals. All right, so these are our crossover signals, and I'll filter them with the time session solver. So I have to connect both of those into an AND node. All right, so let's see. Time of the chart here is, you know, 5 o'clock. So let's take a look at my time session solver. And let's see if I have anything kind of custom built. Here, let me use one of these NYMEX metals. Let's see. Yeah, I'll use one of these NYMEX metals because this comes with NinjaTrader. All right, yeah, so metals go from 9 to 230. Let's see, that's RH1. Huh, okay, regular trading hours and regular trading hours 1 are both the same time. All right, so anyways, all right, so there's our time session solver. All right, so I have in session is set to 1. Right, so in session means that time is, and yeah, just one note, unfortunately, whenever you open this session manager from NinjaTrader, NinjaTrader doesn't hold on to that setting, unfortunately. So we have to go back to, let's see, we have to go back to the NYMEX and set this again. Right, so be mindful of that. Right. Okay, so the output here in session, the in session output, you're going to get a 1. You're going to get an output of 1 from your solver when we're in session. In other words, when we're between 9 a.m. and 2:30. Right. If we set in session to 0. And then set not in session to 1, then we get an output when we're outside of these time zones. So we get an output after 2:30, and we would get an output before 9 a.m. So that's what the in session and not in session works. Say that. Okay, so now if we scroll through the chart here, and there we go. So this 7 o'clock for me is 9 a.m. Eastern time. So remember that session template was, this session template here was set to Eastern time. So there we go. That's 9 a.m. Eastern time, which is 7 my time. So with this session solver having an output, after 9 Eastern time, this would allow trade signals to go through. So now let's take a look at our AND node. All right, so there we go. We got a couple of short signals there, and those ones that, let's see, this is around 5 o'clock. We had a couple around 5 o'clock, and those are not showing up anymore. Okay, so anyways, so you can set a time session for your entry logic, and then for your exit logic, we can just create another time session solver. And once again, I'll grab an AND node, like so, connect that in, and now I can set this solver to whatever. And I can rename the solver names here. Let me go back to the entry, the RSI entry, and I'll set this as the entry time. And let's go back to the exit. All right. So kind of naming my solvers is going to help me out, because when I look at the master list of solvers, I'll see two time session solvers, and I'll know which one is which, right? One's for the entries and one's for the exits here. So let's go in here, and then I can go in here, and I'll use the NYMEX energy again. Let's see, what does 3 look like? Let's see, interesting. Okay, so regular trading hours is a little earlier. Yeah, it's set a little earlier. So let me look through some of these. All right, so I'll just use the regular trading hours as my exits, because the exits go to 2:30. All right, click OK. And let's see, yeah. Let me mark these. So here's a couple of, so these are, you know, so I've got 3 short exit signals, right? 3 short exit signals, going up to 11:30, and let's see, that's right. My session template basically ended at 2:30. It ended at 2:30, which is going to be 12:30 my time. So this is when the RTH session ends. So I have a couple of signals before that. And let me go to the entry signals. And look at that, I've got a couple of long entry signals. And let me change that session. Let me change it to, I think it was 3. Yeah, so RTH3 actually ends at 1 o'clock. So an hour and a half earlier. And, oh yeah, look at that, there we go. So now my, my 3 entry longs actually disappeared. Right? And my exits still, my exits were still allowed to show up right after after the entry time. All right, so there you go. Right, you can add as many session templates as you need to create, you know, custom, you know, to create custom trade times. So if you want to, let's see, let me shrink this up here a lot. So we almost, yeah, we actually have the whole trading day right here. So say you wanted to create a trade, you know, some trading times of say like 15 minutes after the open, right? So 15 minutes, so 15 minutes after the open for the first hour, right? So this is like the first hour, but 15 minutes after the open. And then if you want to create, you know, another trading time just prior to lunch, let's see, yeah, that would be just prior to lunch on Eastern time. You know, then basically you would create, you would add a time solver with this time zone, or with this time range defined. So you'd have to define your own custom session template. So you have to right. So you'd create your own session template for this first hour, and then you would create a second session template for this second hour there. Right. So you'd actually need 2 solvers together. So just to show you the logic, I won't actually do this, but you know, if you wanted 2 custom entry times, you would take 2 solvers and join them together with an OR node. You join them together with an OR node, and that's how you could create 2 custom you know, entry times. And of course, you know, you can just add a 3rd and a 4th solver, you know, if you wanted to add a 3rd and a 4th, you know, trade zone. So okay, let's get rid of that. Get rid of that extra solver there. All right. Let's see. All right. So Terry's got a question about creating kind of custom high and low zones, kind of custom high and price zones based on 30-minute periods. So it sounds like kind of like similar to what Chameleon can do here, but however, and you know, Chameleon is bar based, it's not time based. And so what Terry's asking is, can you combine the high and low for a 30-minute period with a couple of session templates to develop a 30-minute closing high and low, so that you can use that custom 30-minute high and low period to go long if price is above, let's see, is above yesterday's closing 30-minute high. And you'd want to go short if price is below yesterday's closing 30-minute low. No, Terry, no, that would require a custom indicator to do that. So the BloodHound takes the values, that an indicator captures, right? So really, indicators are really needed to do kind of custom stuff like that to capture this price level here, right? So we can see that it's Chameleon that's capturing the high price of the last 24 bars, right? So Chameleon is doing that, not BloodHound. So BloodHound, requires Chameleon or some other indicator to actually capture, this high price and this low price, however you want to define it. So if you want to define it, by 30-minute blocks, and you want to define exactly what time of day those 30-minute blocks take place in, so that requires an indicator to define those times. But more importantly, what's needed from the indicator is to actually store that price value, right? So Chameleon is storing this high price value by a plot, right? So if we take a look at, at this bar here, if we take a look at the, the current bar on the chart, right? Chameleon is feeding that price data. Chameleon is calculating that high price, and it's storing that high price in a plot. And then as price moves, Chameleon is holding on to that high price value and then feeds it to BloodHound, right? So BloodHound needs an indicator to do most of the work. So it's, because all your ideas are very custom, and there's no way that you could design one indicator to do everything. So indicators are really needed to kind of do all this custom work. So as time goes by, Chameleon is actually holding on to that price value and then feeding that to BloodHound so that BloodHound can use it. Yeah. So Terry, I think there are some indicators like that, very similar, on Big Mike's and on NinjaTrader's download areas. So once you take a look through there and see if there's an indicator that kind of does what you want it to do. But also the indicator, needs to hold on to that plot value and bring it forward, to the current bar. So it needs to bring this, this high value, it needs to bring it forward to when you actually want to start trading. So, so as an example, if we move on a couple of hours, BloodHound doesn't have access to this data anymore because, right, this green plot has changed to up here. So if we're wanting to trade in this area, the indicator needs to be able to take this price data and extend it forward until you actually want to use it. Okay? All right, guys. Thank you. And have a good rest of your day. Bye-bye.